May I have your attention, please? If you have not done so already, please use this time to sign in and silence all cell phones. Thank you.
Good morning. I'd like to call this meeting to order. The meeting of the Louisiana Tax Commission is hereby called to order. This meeting is being held at the offices of the Louisiana Tax Commission located at 1051 North 3rd Street, Suite 225, Baton Rouge, Louisiana. The date is October 18th, 2023. The time is 10:02 a.m. Can I have a roll call?
Chairman Shahardi. Commissioner Potier.
Here.
Commissioner Jeffers. Commissioner Vercher.
Here.
Commissioner Wood.
Here.
Board President of Quorum and the chairman is participating remotely.
Is there any old business to take up? I would move, or do I hear a motion for the approval of the minutes of September 2023 rules and regulation adoption session?
I move that we approve the minutes of the September 20th, 2023 Rules and Regulation Session.
I have a motion. Is there any objection to the motion? Hearing no objection, the motion is approved. Would you like to announce the change orders?
Shandrika Banks on behalf of the Louisiana Tax Commission. Today we have a total of 262 change orders. Staff has reviewed those change orders and requests to approve 234 and place 28 in pending status. Staff requests approval of the change orders.
I have a motion.
I would move that we accept staff recommendations and approve 234 change orders and place 28 in pending status.
I have a motion. Is there any objection to the motion? Hearing no objection, the motion is approved.
Shandrika Banks on behalf of the Louisiana Tax Commission. Today we have a total of 7 prior pending change orders. Staff has reviewed those change orders and requests to approve 7. Staff requests approval of the prior pending change orders.
I would move that we accept staff recommendations and approve all 7 pending change orders.
I have a motion on the prior pending change orders. Is there any objection to the motion? Hearing no objection, the motion is approved. Next item, consideration of tax sale cancellation.
Shandrika Banks on behalf of the Louisiana Tax Commission. Today we have a total of 8 tax sale cancellations, all in St. Tammany Parish, 7 due to being erroneously sold and 1 for being duly assessed. Staff requests approval of 8 tax sale cancellations.
I have a motion. Is there any objection to the motion? Hearing no objection, the motion is approved. The next item is consideration of the approval of the 2023 tax rolls for the following parishes: Bossier, Jefferson, Caddo, Livingston, Cameron, Ouachita, Claiborne, St. Bernard, DeSoto, St. Helena, and St. Tammany.
Good morning, Commissioners. Tanisha Malvo on behalf of the Louisiana Tax Commission. We have received the tax rolls for the previously mentioned parishes. The tax rolls, the electronic rolls have validated through our system, and the TC-33s provided, along with the millage total reports and the public service recaps, have all validated and balanced with that electronic roll. We've also received the quietuses, the legislative auditors' letters, approval letters, and affidavits from each parish. Staff requests approval of the 2023 tax rolls for Bossier, Jefferson, Caddo, Livingston, Cameron, Ouachita, Claiborne, St. Bernard, DeSoto, St. Helena, and St. Tammany.
You did say the quietus have been received?
Yes.
I move that we approve the 2023 tax rolls for the following parishes: Bossier, Jefferson, Caddo, Livingston, Cameron, Ouachita, Claiborne, St. Bernard, DeSoto, St. Helena, and St. Tammany.
We have a motion on approval of the 2023 tax rolls for the parishes listed. Is there any objection to the motion? Hearing no objection, the motion is approved. We'll now move on to our appeals. Anyone testifying would need to be sworn in.
You've done this before, administer an oath, you state your name, affirm the oath, and please raise your right hand. Do you swear or affirm the testimony about the truth, the whole truth, and nothing but the truth, so help you God?
I do April here. I do April here. I do this. I do this.
All right, just for housekeeping matters, I want to get the parties to confirm each of their consent to have the chairman participate in the deliberations of this matter, even though he's not physically present. My understanding is he's watching us on YouTube. Can I have counsel for the taxpayer provide consent for the chairman's participation and for the assessor?
That is correct. We do attack consent.
Phyllis
Or confirm
Sims,
our consent.
Phyllis Sims representing Cantium. We consent as well.
Great, thank you. And then the chairman asked me just to remind the parties that we dealt with the evidentiary issue last week. There's a court order here that was fully briefed and argued. So if we can avoid relitigating the evidentiary issue this week in order to expedite the hearing, that would be great.
And Mr. Hoffman, in connection with that, we'd like to confirm that the testimony and the transcript will be incorporated into the full record.
Yes, so the hearing last week, along the testimony offered, the transcript and the exhibits that were offered and introduced into evidence will be made part of the administrative record for this proceeding.
Thank you.
And the protective order the taxpayer filed was granted,
Thank
just
you.
FYI.
Yeah, and before we get started, I'm gonna read this into the record. It is the tax commission's policy to accept all documents into the record that were timely pre-filed in accordance with the commission's rules and regulations. This will be done at the conclusion of all hearings on today's docket. Accordingly, there is no need to formally offer to introduce the exhibits into the records during your appeal hearing. However, if you intend to object to the submission of any of the opposing party's exhibits, you must notify the commission at the start of the appeal hearing. As a reminder, this is an administrative hearing, and as such, the rules of evidence are relaxed. The commission is inclined to review and consider all evidence submitted and to accept such evidence into the record. Any questions? This is a taxpayer appeal. It's the appeal of Cantium versus Assessor Wendy Thibodeau, Lafourche Parish Board of Review, docket number 22-22057-026. Ms. Sims, I believe you're up.
Thank you, Mr. Acting Chair. Just a brief opening statement. This is an appeal and a dispute for the 2022 tax year for Cantium's assets. This is a dispute that concerns the exact same assets and the exact same assessment number, which have been disputed for both the 2020 and 2021 tax years. And the transcripts for the 2020 hearing and 2021 hearings have been submitted into evidence and incorporated into this. And part of that is to streamline the testimony for this 2022 tax year, because we know you've heard it twice before, in addition to quite a bit of testimony last week in connection with the motion in limine hearing. Just a bit of factual information. Between January 1st, 2021 and January 1st, 2022, Cantium did not add any additional producing wells. To the extent there are differences in the years between 2021 and 2022, we will point those out.
Okay, good. Addington, you good with that?
Yes, I am. Look, I'll tell you, I'm not planning on replowing much of the ground at all. We have 2 transcripts from prior years already in the record. So I mean, I assume if asking the same questions, the answers would be the same because it's the same transaction.
Okay, Ms. Sims, you'll call your first witness.
Good morning, Mr. Acting Chairman, Commissioners. My name is Kyle Palazola with Key Miller, and I represent Cantium. We'd like to call as our first witness Assessor Wendy Thibodeau, please. Good morning, Ms. Thibodeau. Assessor, you are familiar with the Cantium assessment for the 2022 tax year, is that correct?
Yes.
And you assessed the Cantium property under the assessment at issue here at a fair market value of $164,548,200, correct?
My deputy assessor does the actual calculations of it, but that is my understanding that that is the fair market value.
That is your office's assessment?
Yes.
Okay. And to arrive at that fair market value, you use the tax tables contained in Chapter 9 of the Tax Commission's regulations, correct?
Correct. You would have to verify that with Jessica, but that is office procedure, and I believe that's what has happened.
So I just want to, for the record and for the commissioner's review, Exhibit 6 to our binder is the notice of your assessment, and Exhibit 6 also contains your detailed asset listing for this tax year.
We didn't bring the binders. so
Okay,
you
if
gotta
that's
give
what
me a
it
second to
has
pull it
there
up.
for you. Okay, I want to turn attention to Exhibit 3A. Do you have Exhibit 3A?
He's pulling it up.
Okay.
Oh, sure.
Are you all able to hear me? Okay. Okay.
Oh, Lord, y'all gotta give me a second. I gotta get the phone.
I had the bright idea to bring a laptop and stuff, 1,000 pages of documents, and it's not as efficient as I thought.
It's smaller. I'm good. It's tinier than what I anticipated.
Yeah.
Okay. Oh, perfect. Sorry.
We're going to refer to this.
This was.
Well, it's
it was
just
a great
smaller
idea
than
the
what,
minute I pulled it open.
it's too small for me. All right, what are we doing? 3.
This is 3A.
Okay.
Oh.
Okay, so you have before you Exhibit 3A of our exhibits, and they're Bates numbered 28, 29, and 30. There, the first thing is Bates number 28, 29, and 30, and that's a letter from Cantium directed to your attention dated May 23rd, 2022, where Cantium submitted its rendition for 2022 taxes, correct?
Okay.
And this letter attaches Cantium's Lat 12 for year 2022. There are pages 31 to 37. Correct?
Okay.
Is that correct?
That's what it looks like. Your left.
Okay, yeah. In the first paragraph of the letter, Cantium states that we respectfully request an opportunity to discuss the valuation approaches listed below for the 2022 tax year valuation for consideration of an allowance of economic obsolescence. Do you see that in the first paragraph of the letter?
Okay. Yes.
And then in this letter, Cantium communicates to you that the purchase price and a current reserve report are values that are significantly lower than the historical cost approach provided by your office.
Yes.
And in support of this, Cantium provides some additional information in this letter. In the next paragraph, refer to page 38, Bates number 38 at the bottom.
I don't see page numbers, do you? Are we talking about this? Oh, the reserve
We don't see.
I don't
these
see
numbers on.
page numbers.
This does not have page numbers on it.
Now, how come she got page numbers?
Base numbers are, they'll have their stamp sequential numbers. Well, they don't have them all.
So,
In the letter, Cantium refers to a preliminary settlement statement in the first item of the letter.
Okay,
And a few pages in
I got it.
is,
found that.
and so you acknowledge receiving that settlement
Yes.
statement, okay? And also, there's just the next page after the settlement statement page. There's
Okay.
also an allocation of purchase price from the sale indicating the jointly agreed upon distribution of value by asset between Chevron and Cantium. Do you acknowledge receiving that allocation of purchase price?
For the record, I'm going to object to council's characterization of this document. There's already been a lot of testimony. This is not the document that was with the sale. This was something Ms. Harris put together.
Do you receive, or acknowledge receiving
You'd
that,
have to
that,
ask
that
Jessica. She
document?
would, I recall the letter, but as far as the details of all of this, that was given to Jessica.
But your office received these things.
You would have to ask Jessica. I'm assuming that if this came with this letter,
Okay,
I just read the front letter.
gotcha. Okay,
I did not go through the details. That's the responsibility of my staff.
I understand.
Got numbers now. Yes.
And do you see in the letter also, Ms. Thibodeau? We're gonna go to the letter again.
Okay,
And we have base numbers now.
yeah, we
Awesome.
have numbers now.
Good. There's an item 2A there, Ms. Thibodeau. It
Okay.
refers to an assignment that's recorded in the records of Lafourche Parish. That Cantium was also directing your attention to, your office's attention to.
Okay,
All right. And Cantium also refers to an ASPA previously presented to your office on May 18, 2022. There was an exhibit 10 to a prior hearing.
but the sale price wasn't on either one of those.
Right. I'm
Okay.
just talking about receiving exhibit
Yeah.
2B. I mean, number
Again,
2B.
I recall getting the letter. I did not go through and verify that what you said in this letter was attached. That's the responsibility of my staff.
Understand.
So I am assuming that that's what happened because she verified that, but you would have to really question her on
Yes,
the
ma'am.
details.
Yes, ma'am. Okay. Did you and your office use any of this information to arrive at your fair market value for Cantium's property tax at issue?
For the year 2022, we use the tables that are provided by the Louisiana Tax Commission.
Okay. So for the information I was just talking about, the settlement statement, the
Mhm.
allocation of purchase price, all of this on page 1 of the letter. No questions were asked of Cantium about this information that it provided?
No,
Let's look at page 2
page 2 of the
of
letter.
the letter. It's going to be base number 29 at the bottom.
Okay.
At the top there, there's an item referred to as the Ryder Scott Reserve Report. Cantium is providing an extract of a Ryder Scott Reserve Report for the state leases only. Do you see that at the top there?
Yes.
Okay. And Cantium describes this report as a January 1, 2022 annual reserve report prepared by an independent petroleum reservoir engineering firm. This report includes the state leases only and provides a valuation calculation for the oil and gas reserves using forward strip pricing at January 1, 2022. The calculation includes the producing wells and the shut-in wells due to Ida. Accordingly, the value of the intangible assets in place to produce the oil and gas would logically be less than the value of the future production and therefore provides an informative data point. Do you see that?
I see the paragraph,
Okay.
yes.
Yes, ma'am. And again, this Ryder Scott report was submitted along with this letter at page 42 to 43
Okay.
of the documents. In reading this letter, did you inquire to Cantium about any additional information you might need to understand this report or anything having to do
About
with it?
this report?
The
Well, no,
Ryder Scott
because
report.
I'm obligated to follow the Louisiana Tax Commission tables.
Okay. So in your mind, there was no need to ask for anything more or have them explain anything more? to
Again, you would have to ask Jessica because she actually calculates all of this. But in general, office policy, when I would see something like this, I follow the Louisiana tax, I'm obligated by the oath of office to follow the Louisiana Tax Commission's rules and regulations. And it is office policy to follow said tables. Jessica should have followed tables in office policy. If she didn't, then that would be a surprise to me, but it is the way my office is run. We have SOPs and very specific step-by-step guidelines on how to assess all property in Lafourche Parish.
Understood. Assessor Thibodeau, you recall that we were here for a hearing regarding Cantium on November 10, 2022 for the 2021 tax year.
Correct.
And in that hearing, you may remember that the market value approach based on the 2017 sale and the income approach based upon the reserve report were discussed in addition to the replacement cost method based on the tables, correct?
Yes.
Okay. Let's look at another book, Exhibit 15A. Does your book have Bates numbers, Mr. Eddington?
This
941.
one does.
Okay, good. All right. So we're going to look at 15A.
Okay.
All right, one moment. Assessor Thibodeau, let's turn to page 948 at the bottom there,
948.
948. It's a few documents into 15A.
Okay.
Do you recall receiving an email from Cantium Tax Director April Harris dated November 25, 2022?
Yes.
Okay. Can you read that email for me, please?
As a follow-up to the recent LTC hearings for the 2020 and 2021 tax years, is there any additional information that Cantium can provide to you that would better support the income or market sales method for the 2022 tax year valuation before the tax payment deadline of 12/31/2022? This tax year has already been appealed by Cantium, but due to the LTC hearings and rulings for 2020 tax year, Cantium would like to keep communication open in an effort to reach an agreement on value using the income or sales market method before the 2022 LTC hearings. Attached to the 2022 returns is filed with comparative information summary on page 5 for the income and sales market sales method.
Okay, thank you. The next page, Ms. Thibodeau, is Bates number 949. Okay. And you, so this, on 949, you're personally replying to Ms. Harris on November 28, 2022, correct?
Yes.
It's like she
Yes.
sent that email on a Friday, you quickly replied on a Monday. Could you just read that first part? Dear April?
Dear April, I'm required to follow the LTC rules and regulation tables, which is exactly what this office has done for the 2022 tax year. I have reviewed your attachments and have not found where I have grounds to deviate from said tables. If you do not agree with the tables, the LTC holds proposal hearings in June, and I would suggest you make your claim there.
Great. And so again, the position of your office is that you're required to use the tables to make an assessment like the one that was made here.
Correct.
Okay. Have you ever used anything other than the tables to make an assessment of oil and gas property like Cantium's for the 22 tax year or any prior year?
Not to my knowledge. I mean, you're asking me, I've been doing this for 26 years. There's
Understood.
no way I can remember
Yeah,
if I ever deviated, but
that's,
I'm pretty habitual, so I'm safe to say no.
No.
The only way I deviate is if the tax commission tells me I have to deviate, or a judge.
understood.
And that goes for everything, not just oil and gas, watercraft, residential, everything. I like to be very consistent and uniform.
I just want to confirm that you did not meet with Cantium for the 2022 tax year prior to the end of 2022, as we were talking about in these emails.
Not that I don't remember, but no. If you say no, I'll agree with you. I don't
Okay.
remember. We were going through a hurricane and everything else. I
Understood.
have no idea.
Yes, ma'am. Understood. And that's all the questions I have.
Okay.
Commissioner, I want to call Assessor Thibodeau on my case in chief, but I do want to run through a couple of or one of the documents that Mr. Palazzolo asked about. Assessor Thibodeau, Exhibit 3A. This is a letter that's dated May 23rd, 2018, correct?
2022.
I'm
Ms.
sorry,
Eddington.
2022.
3A.
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 Yep.
Again, this is a letter dated May 23rd, 2022, correct?
Correct.
And they specifically ask you about some documents, on the first page, 2A, the assignment and bill of sale, that is recorded in the Lafourche Parish Clerk of Court's office. Now, this is a document we've talked about before and you've reviewed it, does that document tell you the sales price
No,
that was paid? And then 2B, could you please read what Ms. Harris said in 2B?
due to the sensitive nature, non-disclosure agreements in effect between the seller and buyer, a full asset purchase and sale agreement, APSA, is not provided herewith. However, it was previously provided May 18th, 2022 as exhibit 10 for the Louisiana Tax Commission hearing.
Okay, again, I will stipulate that it was in fact, introduced to the tax commission for the May 18th, 2022 hearing. But again, this question I've asked you every hearing, I asked you last Monday. Did Cantium ever provide you with a copy of Exhibit 10, the actual act of sale?
No,
I
and
just
for the
want to lodge
life
an
of me,
Objection, Mr. Vercher, that this was all considered last week. at the
Okay,
motion.
hold on.
We'll note the objection.
Thank you.
And give him some
Yes, ma'am.
leniency.
Yes, sir.
So my confusion with this is that if I was sitting in their shoes and someone was constantly saying, I didn't get a copy, I didn't get a copy, I would be certified in return receipt, emailing, scanning every day, attaching everybody in this room along with it to prove that I said this document in its entirety. I don't want it from anybody else. I want it from them so that they cannot say that there are any pieces, parts that you took out, that they took out. I want it straight from them to me so that I can go through it with a fine tooth comb.
And again, this letter is dated May 23rd, 2022, and it references the act of sale being provided on May 18th. Now, you testified at that May 18th, 2022 hearing, did you not?
Yes,
And you testified that 5 days before this letter was sent that you had not received it, correct?
correct.
Thank you. I will reserve the rest of my questions for our case in chief.
Thank you.
Thank you. Appreciate it. Mr. Vercher, I'd like to call Miss Jessica Swift next, please. Good morning, Ms. Swift.
Good morning.
And so some testimony was just had regarding your role in this. I'd like to ask you a few questions. Can you please introduce yourself to the commission?
I'm Jessica Swift, Deputy Assessor of the Fouche Parish Assessor's Office.
And what is your educational background
According to the office or just in general?
in general?
In general, a bachelor's of mass communications, and I'm a certified deputy assessor.
And what is your role in Ms. Thibodeau's office as the assessor's office?
Oh, I do oil and gas and change orders and kind of a little bit of everything.
And you were the deputy that assisted her in this assessment.
Yes,
Okay.
yeah.
In relation to this assessment number and Cantium's account, to your knowledge, what valuation method was used to arrive at the assessed value?
The rules and regulations of the tax commission.
So the tax tables were all that was used?
Yes, I've been doing it for 15 years and I've never deviated from them. I've always gone with those values.
And so no analysis was performed outside of the prescribed tables for this assessment?
No, sir.
Were you asked by the assessor to request any additional data from Cantium in order to consider any alternative methods?
No, that's not something that, if I need anything, I would usually reach out if it was something that, I felt I was lacking. But no, I don't believe I requested anything additional.
And I just want to confirm, let's refer to 3A, Exhibit 3A, which is in front of Mr. Eddington. That is a letter from Cantium to Assessor Thibodeau dated May 23rd, 2022. You see that?
Yes,
Do you acknowledge receiving this letter
yes,
in your office?
yes.
Also, do you acknowledge receiving all the attachments that are described in this letter that follow the letter?
Yes.
If you need a chance to look at it, you can do that. But you acknowledge receiving it.
Yeah,
all.
yes, sir.
Okay. I have no other questions for Ms. Swift.
And I have no questions for Ms. Switch at this time.
Okay, thank you, Ms. Swift. The chairman would be proud. We're moving right along. Mr. Vercher, I'd like to call Mr. Ken Beer, please, as the next witness. Mr. Beer, would you please introduce yourself to the commission?
Kenneth Beer, Chief Financial Officer of Cantium based in Covington, Louisiana.
So Cantium is an oil and gas company that's headquartered in Louisiana. What is your I'm sorry, you're going to share
Oh,
this.
I'm sorry.
We're all able to hear that. Let's just start.
Let's repeat it.
Yes, we'll repeat. Mr. Beer, will you please introduce yourself to the commission?
This is still Kenneth Beer, Chief Financial Officer, Cantium LLC, based in Covington, Louisiana.
And what is your educational background?
Degree in economics from Dartmouth College and then an MBA from Stanford University.
When did you join Cantium and what are your job responsibilities there?
Joined Cantium in December of 2018. As CFO, I'm responsible for all finance, treasury, budgeting, accounting functions, and in an executive capacity, involved in any decisions around capital projects as well as investments, M&A, and valuations of any properties we're looking at.
And what is your professional experience prior to joining Cantium, whether it be oil and gas or otherwise?
Beforehand was the EVP and CFO of Stone Energy based in Lafayette. Before that, and that was for about 13 years. Before that, partner and director of research for Johnson Rice, which is a boutique energy research company. Similarly, before that, with Howard Weil in a similar capacity, and was an analyst with both Wood Mackenzie and previous to that, the Boston Consulting Group.
So your previous experience as an analyst and oil and gas executive has provided you with a background on oil and gas company and asset valuation. Is that right?
Correct.
Let's talk about the assets under protest here. Are you familiar with the specific Cantium properties subject to this tax appeal?
I am familiar with a subset of the Cantium assets that were located in the state waters of the Gulf of Mexico.
And just as in prior years, just real quick, we have a demonstrative that shows the state versus federal assets of Cantium on a chart over here. Can you generally describe the difference between the state and the federal properties and where they're located?
Sure. The federal properties are all in the main pass area. It's all just federal, and our properties are in the yellow tinted blocks. So to the right or to the east would be the main pass properties, all in the federal waters. The Bay Marchand properties to the left or to the west is split about 50-50 between state and federal.
How did Cantium come to own the property and equipment we are here to discuss today?
We ended up purchasing these properties back in 2017, all as one package. We purchased these properties for about a little over $83 million, $83.5 million. And about 20% of the value of these properties were in the state waters. We've got the settlement statement, which was provided to the assessor's office, Exhibit 11, I believe it was, which walks through the important part of any sort of purchase, and that would be the settlement price.
So Cantium started by acquiring assets in 2017, and then what happened? In other words, what does the property set look like after Cantium assumed operations?
Yeah, we continue to operate all these properties since 2017, both the federal and the state properties from 2017 through today. Really, the only addition has been drilling some wells on these properties. We drilled on the state property, drilled a handful of wells between 2017 and 2020 or 1/1/2022.
And how has the market for oil and gas assets changed since Cantium acquired the assets in question?
Actually, since 2017, the market for Gulf of Mexico properties has actually degraded over this time. You've had significant wind insurance increases. You've had onerous new governmental regulations that would offset any sort of price increase. They're now only, because of that, there's only a handful of Gulf of Mexico shelf operators, including ourselves. All the others have either left the Gulf, merged, or have gone out of business, bankrupt.
Let's talk about the asset valuation as it relates to the oil and gas wells under protest here and the different methods used to value the assets in question. Are you aware of the methodology the assessor used in calculating the assessed value for the assets in the state waters for 2022? She just testified.
Yes, correct. It sounds like they just use the fixed tables to determine a replacement cost for fair market value.
Does using that approach solely make sense to you from a valuation standpoint?
In our mind, certainly not. Just you need a common sense gut check to make sure that it's tied to some sort of market value. In this case, kind of this arbitrary calculation had no tie to true reality or valuation, in that it was 10 times greater than the market would suggest, and even 2 times greater than the full acquisition, which included the 80% tied to the federal assets.
So what approach or approaches to value make more sense to Cantium?
We would stick with the market value method, similar to the LTC rulings for 20 and 2021 tax years. After we make some adjustments to account for some incremental activity on the assets, adjust for the past production and also the oil price outlook. Secondarily, we would look to a reserve report or the income value for confirmation or support to this market value method. The reserve reports are used as an industry standard for any sort of acquisition or bank lending, anything to provide an initial data point for evaluation exercise.
And so what are the mechanics of your market value method? Let's start with that.
Sure. We started with a value paid for the assets directly from the purchase price allocation in the sale agreement. And next is, per the documents provided to the assessor, we would allocate the value between the state wells and the federal wells tied to the value agreed upon by Chevron and Cantium. So the arm's length purchase and that was agreed, as well as the allocation by lease for the state and federal leases. And then look at the full acquisition price of these assets, which was the $83.5 million. And the state properties did represent, as I've mentioned, about 20% of the value of the assets. So the logical value, at least in our minds, for these state assets would be between $15 and $20 million. There were 50 leases total, of which 13 were state leases. So you can get that ratio. We then adjusted because we did have a handful of wells and tangible expenditures since 2017. So we actually moved our original $19 million up to $29 million for our value on 1/1/22. And then this was we qualitatively estimated that the increase in price from 2017 to January 1st, 2022 was somewhat offset by all the production that was depleted during this time period, during this 4-year time period. You know, remember that oil reserves do deplete and become less valuable each day as we produce out those reserves until you're ultimately left with nothing except the abandonment cost.
So the sale at issue here was June 30th, 2017. Why should the commission look to that sale that is 4.5 years after? Why should they look to that sale today, which is 4.5 years ago?
Sure. We think the purchase price still remains highly relevant, especially as we've adjusted for the incremental activity and increased that sales value to the just under $30 million. The sale was 4.5 years ago, but similar to even a house sale, you'd certainly look at what the house next door sold for 4.5 years ago. And then, you know, like anyone else, you'd adjust for other issues or other factors like mortgage rates, what's happened in the neighborhood, competitive rental rates, or other houses nearby, what their listings would be. In our case, this would equate to adjusting for past production, which is now behind us, which is lost, an upward price adjustment, the Gulf of Mexico neighborhood becoming far less attractive, and then the addition of new wells. We recognize that for 2023 tax year, the sales price won't be used because of the new pronouncement using a discounted cash flow template, but feel like it's very reasonable for the sales price to be used for this year.
let's talk about abandonment liability for a moment. Previously, the Louisiana Tax Commission increased the sales price in its ruling by the abandonment liability. Is that right?
Correct.
Does Cantium agree that the abandonment cost should be added back to the sales price number?
Yeah, we would still disagree with this approach since we still think of a liability as a negative to a value and wouldn't add it back. As I'd mentioned earlier, at the end of the field life, you do have to spend monies to abandon the well, but even if there is an abandonment liability add back, that gets up to about $55 million, which is still just 1/3 of what the assessor's claim would be.
Did Cantium calculate an asset retirement obligation for these properties?
Oh, we did. Our abandonment engineer provided these figures to Ryder Scott, reviewed the work, included the abandonment estimates in their reserve report. These figures are also included in the company's audited financial that Ernst & Young reviews and ultimately they're signed off by the CFO, myself, and the CEO for the audited financials. So a lot of scrutiny on the abandonment estimates. We used these same abandonment figures by well for this analysis, and the abandonment was calculated at $25.21 million. And we provided this to the assessor on a well by well basis. And I believe we have that in, I think it's called Bates 20 or Bates 44 through 48, where we have the list of all the wells as well as the abandonment associated. In that, you can see that we've provided the abandonment numbers for really all of our wells. We do have some TA'd wells, temporarily abandoned wells, that don't have abandonment associated because we've already spent the money on the abandonment. Those wells are simply waiting for the parent structure, either a platform or caisson, to be abandoned, but there's no more activity or cost involved in those wells.
Can you run through the numbers for us on the actual active abandoned shut-ins? Is this an appropriate time to do this? I mean, since you brought it up.
Sure, you tell me exactly what are you looking for?
As far as what wells are shut in, what wells have been are inactive. If any of the inactive have actually changed status from our prior testimony.
Okay, and we can maybe go in even more detail with Ms. Harris, but what we
But
provided,
if you want to wait to Ms. Harris, I just thought since you brought it up just now.
and again, I'll do high level. What we ended up doing is, you'll see on pages 44 through 48, it's just a list of all the wells. And I'm sorry, it's
Mr. Vercher, it's base number 44 to 48. This is part of that May 23rd, 2022 submission to the assessor. It's included in there. It looks like a spreadsheet and it's those 4 pages. Yes, sir.
yeah, if you see, there are a lot of wells. Again, this is very old property base, as you're aware. Most of the wells have actually been abandoned. So a lot of TA'd wells are abandoned wells. Where there are active wells, there's a corresponding value for the ARO, the asset retirement obligation. So that's on the various pages, you'll see, dozens of abandonment, the abandonment liability for all the various active wells, not the temporary abandoned wells. And if you look at the bottom of the last page, the aggregate of that number is the $25.21 million. And again, our abandonment engineers, a lot of experience with abandoned 350 wells, and they have an exceptionally good idea as to what the abandonment cost per well may look like. And that gets updated and reviewed each year. So this is for the 1/1/22 year end. And they've provided the estimate for each one of these wells. Does that help? Thank you.
And we will summarize at the end of our testimony on the sales approach, what the numbers we're proposing should be. And so we're going to come to that in just a moment. how do reduced reserves over time apply to the sales approach?
Yeah, I do think it's important. Since 2017, we have produced a few million barrels from the original reserve base in the state waters. As I mentioned, like all oil reservoirs, there's a finite amount, and so the decline or depletion curve does reduce the value of the remaining reserves every day. Yeah, accordingly, if you don't have any activity, and we did have some limited activity, and if the price is held constant for a moment, then each year the assessed value and the market value should decline since we're just depleting a reservoir.
So I want to ask you a question about how oil prices affect the sales price valuation, and we have a demonstrative to show the commission that I'm going to put up. Here it is right here. So we just provided Mr. Eddington and the commissioners a demonstrative that shows some information about the oil price. And it's the document with the lines, the colorful lines that are running across the page. How do oil prices affect the sales price valuation?
Look, oil prices can either help or hurt the value of reserves. From 2017 to 1/1/22, we did see an increase in the long dated oil price from around $55 back in 2017 to just under $60 for the long dated oil price for 2022. If you want, I'll walk through these lines because it is a little confusing, but it brings home the point that anytime you're looking to make an acquisition and or value reserves, you're not looking at a single point in time. You're looking out to what the futures market tells you the price would look to be. So if you looked at each one of these lines, the very beginning of every line is that point in time. So, the very first one, the black line.
If I might, Commissioner, I'm going to enter an objection. This document wasn't submitted. I have no idea what it is. I wasn't able to prepare for it. And for them to try and basically introduce a document after the fact through testimony is outside the allowable scope of testimony and outside the scope of the scheduling order issued by this commission.
I'll note the objection, but
Mr. Vercher, our view is that this is a document that assists with this testimony. It is a publicly available source. It is designated at the bottom of the sheet that the commission can give whatever weight it wishes to give to it.
I agree. I'm allowed in.
Okay. And again, I'll try to be brief. Really what this highlights is you don't look at oil prices on a single day. You look at it well into the future. And that's what these forward curves provide. When oil prices on a current basis tend to be low, the outer future prices tend to be higher. And prices tend to be, current prices are high, as you can see from these curves, they're backwardated down to a much lower price. And our point is for any sort of valuation and or acquisition exercise, you look out into the future, and that tends to be in that $50 to $60 range when you're looking at long dated pricing for oil. That's the major point.
And so that concludes the testimony on the sales price evaluation. I'd like to just turn your attention to another demonstrative that we just handed you that has the valuation method comparison. And on this sheet, Mr. Beard, that just kind of summarizes it for the commission. what is the sales price approach that Cantium is offering as the proper valuation under the sales method?
Yeah, on the sales method, we would look at that $29.7 million, or $29,748,927.
And you also designate that if the retirement obligation is to be considered, what that number is verified to be.
Yeah, again, if there is an add back, then that number increases up to $54.9 million.
Do you believe the assessor should have considered any other valuation methods?
Yes, we really do think that the income or reserve approach should have been considered also as a secondary method to support this valuation range.
And this income approach or reserve approach became available after the people passed the constitutional amendment recently, correct?
Correct. And I guess it was November of 2020. Both the industry as well as the assessors proposed a constitutional amendment that did allow for the assessors to use some type of income method in valuing oil and gas properties. So it was available for both our 2021 as well as the 2022 tax year. And we provided a summary extract in both cases.
And so for this 2022 tax year, isn't it right that no regulations were yet in effect to guide you as a taxpayer in submission of evidence for this approach?
Correct. Again, we provided the summary extract. We didn't know exactly what else the assessor may look for or require. We attempted to reach out to the assessor to get guidance on what else she might need to assist her in this assessment, but were either rebuffed or ignored.
So what is a reserve report exactly?
Yeah, the reserve report, and it is important, I guess it's a summary of the production profile for all the wells in the field over time. The production is always in decline, so the volumes are reduced each year until depleted. The futures oil price or the strip, which is what we described previously, is looked at and layered into the reserve report so you can generate a projected monthly revenue stream. The estimated costs are then put in, which includes operating costs, transportation costs, severance taxes, and ultimately the abandonment cost. And that's all subtracted from the revenue stream. And that's the basis of a reserve report.
What does your company use a reserve report for?
Yeah, the reserve reports used for banks for loans. They're used by companies for any sort of acquisition. They're used by our auditor for our audited financials. So the reserve reports are really the valuation cornerstone of our industry. I'm assuming that's one of the reasons why the constitutional amendment was put in place, is to have this very pertinent information available.
Is the reserve report and the Ryder Scott report, they're not the same?
In this
Are they the
case,
same?
what we provided was an extract from Ryder Scott from their database, and we have our reserve engineer with us today, but we extracted the data from the Ryder Scott report just to show the state wells. Again, most of the value of Cantium are outside the state, it's in the federal waters. So we pulled that data from not our database, but the Ryder Scott database, and provided that in a summary fashion or summary form to the assessor.
And so we've mentioned Ryder Scott a couple of times. Who is Ryder Scott? What is that entity?
Sure, Ryder Scott is really the premier third-party reserve engineering firm that provides independent reserve reports for companies.
And along those lines, if you would not have had this appeal, would you have hired Ryder Scott to do the report?
So we actually have had them do our reports every year since inception. So we have a Ryder Scott report every year. What we didn't do for this year, because the submission time was after the 2021 hearing, where there was a request for a more fulsome reserve report. And we did provide a 2023 reserve report for from Ryder Scott for just our state reserves. Normally, we wouldn't break up state versus federal. There's just no reason to. That's why we took their database, extracted the information, and provide the summary sheets for both 21 and 22. And having heard from the tax commission, unfortunately, after the submission deadline, we did do that for 2023. So there is a Ryder Scott report just for state reserves. We paid for it, had them just do state reserves. So we do have that available for 2023. And it's virtually the same process, same procedure. It just is a full report from them as opposed to an extraction of their database, which has all of our reserves.
And the reason for the question, and y'all mentioned it earlier, this is a sale that took place 4.5 years ago.
Right.
And so at what point in time is the sale relevant for today? And, you know, we need to make sure that the information that we have to tie the two together is up to date and accurate, and that we can understand.
Yeah, couldn't agree more. That's why, again, we try to adjust for the purchase price, but also use the reserve report as a good gut check on what the value may have, what the value may look like. And again, it's a data point. It's, as I said, it's more for support.
Okay, thank you.
And so let's do that for the commission. Let's explain, let's turn to Bates pages 42 and 43, which are part of that May 25, 2022 letter to the assessor. And let's go to Bates pages 42 and 43. And this is the, well, I'm going to ask you this. What are pages 42 and 43?
Sure. As Ed mentioned, this is the report that was an extraction from the Ryder Scott database. We just utilized the state well, so it excluded all the federal properties because that really doesn't have any bearing on this assessment. We provided this 2-page summary, which aggregates all the state wells into what we thought was a nice, simple 2-page document. Despite actually most of these wells being shut in and inactive due to Hurricane Ida, we included all of our wells with, we didn't try to apply any sort of shut-in discount, so that the first well was a summary of our producing, the first page, I guess that would be page 42, is a summary of all of our producing wells, because remember, post-Ida, we were hit horribly, went right over Bay Marchand. We had brought some of our wells back on at that point. The remaining were shut in. But just to be fair, we thought we want to try to ultimately get those wells back on production. So we included the shut-in and inactive wells due to Hurricane Ida. We still included that in our assessment, in our valuation. So the second page is all the shut-in wells. You can see it's about 2/3 shut in and 1/3 producing. We then use the line-by-line spreadsheet that Ms. Harris provided. I guess that's your Bates pages 44 through 48, which is right behind it. And you can see, we submitted that to the assessor, and that lists the value as well as the abandonment cost by well. So we summed up all the revenues, deducted the costs, and that's how we derived the $62.7 million figure.
And so the $62.7 million figure is Cantium's income approach number for the commission to consider.
That's correct.
And it was also the number that it provided to the assessor to consider.
That's correct.
So I just want to be clear, because we've talked about P&A liability or asset retirement obligations. Just to be clear, the asset retirement obligation or the P&A number of 25.2 million should or should not be deducted from the reserve report.
Yeah, so the reserve report value is the 62.7, which, as I said, is the $87 million in net revenues minus the $25 million in abandonment costs. And I know the tax commission added back the abandonment cost for a market price methodology, which we'll just have to agree to disagree. So that's fine. But for a reserve report, the abandonment cost is always deducted. It's part of the report. It wouldn't pass muster with Ryder Scott or E&Y or a bank or anyone looking at a reserve report if you didn't have the abandonment reduction. This is especially true in the Gulf of Mexico's where the abandonment costs are high. So it's integral to the report.
Was there any discussion about the abandonment charges in the initial purchase of the assets? That's the reason for, at that point in time, you're arguing, was our sale a valid sale? Was the sales price the sales price?
Yep.
So was there any discounts when that price was negotiated?
So the value, the 83 million, or I'd say net to the state waters of 19 million dollars, that includes a reduction in value for the abandonment costs that we will have to spend money on. So when Chevron sold us the properties, they knew that we were going to have, and we knew we were going to have to spend money on abandoning these wells, just like we had to pay severance taxes on the reserves, just like we had to have operating costs. So again, that's where we'll agree to disagree on the market value approach. But I see that differently. A reserve report, whenever you have a reserve report, if y'all have ever, received one, it will have the abandonment cost as part of the reserve report, because it's part of the ultimately, like operating costs. It is something that Ryder Scott will 100% take into account when they are providing a reserve report back to, whether it's to Cantium or a bank or anyone else.
So you're aware that the Louisiana Tax Commission adopted new rules for 2023 tax year.
Oh, yes.
And what method is employed for those 2023 rules?
Interesting enough, it's a discounted cash flow method template that interestingly is very similar to a reserve report.
So to help assist in understanding the income approach, how does the 2023 discounted cash flow rules compare to the methodology in the reserve report used for 2022?
Yeah, so the 2023 methodology is based on an income value method. So it really takes, as I'd mentioned before, it takes a stream of cash flows and provides a value to a calculated value. Interestingly, the value for us for these assets using this LTC prescribed approach, this template for 2023 is about $45 million, which is pretty much close to the 30 million that we're prescribing or suggesting using the market value, and then the 60 odd million dollars that our reserve report for 2022 provides. So, and that accounts for any sort of movement in oil and gas, because that was part of the template. So we've got the ballpark is in that 30, maybe as high as 60 or 45. That's the ballpark, well below the $160 million that was suggested.
Okay. Are there any other adjustments that might be relevant to this valuation exercise that we're here today to talk about?
And this is one that I won't spend much time on, but we brought it up before. And at least in our world, it is important. And that's a concept of tangible value versus intangible value. As we've talked about previously, the tangible assets would be the iron in the ground, the production casing. And that's the tangible value, the physical assets. The intangible value would be the value of the leasehold itself and the reserves in the ground. And that represents a majority of the overall value. In the sales agreement with Chevron and really the industry standard, we recognize the split as 80% for intangibles, 20% for tangibles. However, as we noted, the value of the reserves is intangible. And that 80-20 split would suggest, if you go back to our original market value approach, $19 million would take an 80% discount, which would drop it to a number that, in a sense of fairness and reasonableness, we didn't think that number would be right. I mean, that would put it into the low single digits. And so even though this is industry norm, we felt like we would not push this methodology because we felt like at $19 million, that was an appropriate number. So that would be the only other discount that would normally come into play with this kind of exercise.
So before we summarize the numbers that we want to propose to the commission, I'd like to just loop back around with one more question about the settlement statement. Was P&A liability a deduction on the settlement statement?
No, the settlement statement was truly just what we paid for everything, the good, the bad, the ugly. And in this case, the abandonment's the ugly, the production and future cash flows, the good. So that is, it wasn't segmented into you pay for this much for abandonment and that much for the reserves. It was a single number.
And so before we conclude your testimony here, let's summarize for the commission the sales approach and the income approach for their consideration for this assessment number.
Sure. For 2022, we derived the number of the 62.693198 for 2022. And again, it's up a bit, and that's for 2022. I'm sorry, I thought I said income. What did I say? I'm sorry, income approach or reserve approach is the $62.6 million. And it did increase from our calculation for 2021. Some of that is tied to oil prices moving up. Some of that is some of the activity, but we did see an increase year over year, just as we saw an increase from 21 to 22 in the sales method.
And the number proposed for the sales method is?
The sales method is at $29,748,927. That's at least our suggested number.
And the other number there in red, that if the commission were to add back ARO, what would the sales number be?
Yeah, as I'd mentioned, the add back would put the number up at the $54.9 million.
So if there are no other questions, I have no other questions at this time for Mr. Beer.
Good morning, Mr. Beer, Brian Eddington, counsel for the Lafourche Parish Assessor's Office.
Good morning.
As your counsel said at the beginning, we've already had two of these
Yep.
hearings. The transcripts are in the record. Instead of replying all that ground, I assume that the questions about the transaction that you were asked in the previous case, I mean, if you were asked the same questions, you'd get the same answers, correct?
That's correct.
Okay, great. That makes this real short then.
Thank you.
Okay, you previously testified in the 2020 hearing that the headline purchase price of the assets as of January 1, 2017 was $162 million. Can you tell me what you mean by headline purchase price?
Sure. The price as of January 1st would have been $162 million, but we didn't buy it on January 1st. We bought it on July 1st.
Okay.
I mean, I'm sorry, yeah, July 1st.
Right. So headline purchase price was just a price that had closing taken place on January 1.
Had it taken place?
Okay.
Yes.
Great. And you went on to explain, I think it's where you were going, that, and I quote, "We didn't pay 162 million. We paid 83,558." Is that correct?
Correct.
Okay. I want you to turn to Exhibit 11. This is the preliminary settlement statement.
Got it.
Okay, and so that purchase price, that top line, the 162 million, that's what you previously referenced as the headline purchase price.
Correct.
And there are two adjustments. There is a deduction of 138,133,658 for a revenue adjustment and an increase of 58,924,958 for expense adjustment. And also a minor adjustment for stored hydrocarbons. Can you tell me what that expense adjustment is? The increase of approximately 59 million?
Sure, that is just the operating expenses that took place during that time, 6-month time period.
So the operating expenses that were incurred between January 1, 2017 and the closing date of June 30th
Correct.
were added back to the purchase price, and they were about 59 million for 6 months.
Correct.
Okay. What about the revenue adjustments? What does that $138,133,658 figure represent? How is it calculated?
Yeah, that's the revenue that came in from these properties so that Chevron ended up receiving the net of about $80 million between January 1 and June 30th.
Okay, so that's
That-
simply the revenues that were received in that 6-month period.
Yeah, not by us, but by Chevron.
So basically, the expense adjustment and the revenue adjustment represent the changes in the market that occurred between January 1, 2017 and June 30th, 2017.
Not the change in the market.
Well,
change in
just
the
the
asset.
change in the
Yeah,
assets.
yeah.
Okay,
Which gets back to, I guess, an earlier point that over time, the value of properties decline. And that's even in a 6-month period that happened.
what about shifts in the price of a barrel of oil? Does
That
that affect? Well, let me just, according to the U.S. Energy Information Administration, on June 30th, the price of a barrel of oil was $46.07.
That's about right, correct.
On January 1, 2022, it was $75.21.
Correct.
There was always some discussion that you recognize that 4.5 years elapsed between the closing date and January 1, 2022.
Correct.
And you're aware that an assessor is obligated to value the property as of January 1 of each year, in this case, January 1, 2022, correct?
Correct.
Can you calculate the revenue adjustment and the expense adjustment and what the amount due seller would have been had closing taken place on January 1, 2022?
Well, again, if you look at the reserve report that was provided, that would be probably the starting point.
Okay, but that's just forward-looking projections, correct?
That's correct.
So
That's-
I'm talking about the change from January 1, 2017, the headline date,
Okay.
and 5 years later, January 1, 2022.
Okay.
How would you calculate for that period, the revenue adjustment and the expense adjustment, again, if closing were to take place on January 1, 2022?
Okay, so you're not asking for the value at January 1, 2022.
That's correct. That's not my question.
You're asking the
If-
interim period.
Yes.
Yeah, well, actually, again, there would be some contribution, or in some cases, especially in some cases where prices dip pretty low during that
Sure.
time period, you would have either margin coming into the entity, in this case, Cantium, or negative margin coming out during that time period.
Can you calculate the revenue adjustment based upon the information before you
No,
at closing? Can you calculate the expense adjustment as of January 1, assuming closing had taken place on January 1, 2022?
not from this information, correct.
Can you tell me if the purchase price would have been higher or lower?
Well, and that's what I was trying to suggest earlier is you've got some variables. You have price of oil, which to your point
Right?
is higher in January 1 of 2022. We've produced out several millions of barrels, so there is a decline curve, so that would be a negative.
Okay, and
The
is
low-
that, or is those decline curves in the record?
Those are not.
Okay. So we don't have that information we would need. Keep going.
Okay, again, we were producing every year, so common sense would at least suggest that those barrels are gone, because in the list of wells, we show them as producing wells, so those
What
wells
about,
are indeed.
what about
are indeed-
quantification? Is there any information in the record showing what was taken out?
No,
Keep going. Are there more factors?
as I said, the production environment for Gulf of Mexico and price, and then the adjustments that we made during that time period in terms of additional wells.
Sure, and I understand the additional wells. That's pretty easy to document because they're separately reported.
Okay.
And then what about the expense adjustments? What would those be? I mean, you described the revenue adjustments.
Yeah, each, to produce oil and gas, you have a pretty substantial operating cost, especially with a very old field like our fields are, 70 years old. So indeed, the expense portion would be very stout as well. As you
And
can-
is there anything in the record that addresses the expenses that were incurred between January 1, 2017,
No,
January 1,
no,
2020?
that is correct. Just
Okay.
the reserve report, which to your point is a looking forward, but does provide the costs associated, the projected cost.
Again,
Fair enough,
projected.
projected costs, yep. Projected costs for the reserve report.
Okay, and let's turn to the reserve report. That's exhibit 42 and 40, I'm sorry, Bates numbers 42 and 43 in exhibit 3A. Bates 42 and 43 in exhibit 3A. Yeah, take your time.
That's this? Okay, yeah. That's all right.
Now, this two-page document, who actually produced this document?
Our reserve engineers extracted this information from the Ryder Scott database.
Okay, and the supporting documentation, I mean, all that was provided was this 2 pages of forward-looking speculation, correct?
Yeah, that's correct, as well as the spreadsheet right behind it, which also provides well by well. This is a summary. These 2 pages are
Right.
just a summary, and behind is the well by well support.
But again, it's
It's a summary.
page 44, it's page 44 on, you said the detail. Again, this is just extracted from the Ryder Scott database, and
Correct.
that was not provided to the assessor, so.
That's correct.
And these numbers on pages 42, 44 through 48 are also just speculative, are they not?
No, they're not speculative at all. They were directly pulled from the Ryder Scott database.
Okay, well. Explain it, because I'm looking at the summary.
Yep.
And it's a reserve and economic projection as of 1/1/22, and it starts at 2022 and goes to 2030.
Correct.
So, I mean, unless they
Yeah.
have a crystal ball, this is speculative, right?
I was addressing, this is not Cantium speculating. This is the Ryder Scott.
This is Ryder Scott speculating.
No, this is
Okay.
the Ryder Scott database for the reserve report, which
Okay, no, I understand the distinction. Thank you for clearing that up. And if I understand your testimony correctly, what you're saying is that you believe the assessor should have taken this 2-page summary and used it to do an income approach analysis?
we put this in front of the assessor. Again, the 2-page summary absolutely would provide a basis to at least understand, or at least to provide some valuation guidelines from a reserve report, which again is a valuation tool that is used in the oil and gas.
Right,
business.
but it's not all an assessor would need to do an income approach valuation, is it?
Probably all I would need would be those 2 pages.
Well, it's interesting. Earlier, you talked about that you had relied on and referenced some audited financials.
Correct.
Were those audited financials provided to the assessor?
Actually, the audited financials rely on the reserve report, not the other way.
Okay, but because I will tell you, audited financials is something that assessors look at in doing an income approach valuation. Can you show me those audited financials
No.
anywhere in these exhibits?
Not provided.
Not provided. Okay. Thank you. No further questions.
Shoot, wanted to ask Bill.
Any questions from the members? You have any follow-up?
That's okay.
Any?
Oh, hold on.
Can you tell me if the audited financials were ever requested?
No, I was about to say, again, we were somewhat in new territory. We didn't know how much to provide, if we were overloading the assessor. We reached out, as you could tell by the correspondence, to try to find out what they would like to see. And as I said, either it was rebuffed or ignored. We didn't get any traction. And I realized this was soon after, this was the second year after the constitutional amendment passed. So we were trying to understand how to satisfy their informational request. And they were probably trying to figure it out as well, but in our outreach, we got virtually no response at all.
And for the record, I want to make sure that we understand, if you put on the record exactly what your request for this, for 2022 was.
Sure. Yep, it is for 2022. Yep. Yeah, I mean, we are sticking by our adjusted sales approach, which is the 29,748,927. I think that's the best number out there.
Okay, thank you.
Great, thank you very much. We'll leave it.
So that's all for Mr. Beer. One moment, Mr. Venture. Mr. Virtue, I'd like to call Caitlin Alexander to the testimony table, please. Good morning, Ms. Alexander. Can you please introduce yourself to the commission?
Caitlin Alexander, Reserves Engineer at Cantium. Okay. Caitlin, K-A-I-T-L-I-N, and then Alexander.
Your office is located at Cantium's headquarters in Covington.
Yes.
Can you provide your educational background, please?
I have a bachelor's of science in petroleum engineering and a minor in business from the University of Texas at Austin.
When did you join Cantium and what are your job responsibilities there?
I joined in August of 2020. I work in the reserves department, so I handle our internal reserve report. And I also work with the asset teams for the new opportunities. And I audit our internal asset teams packages to make sure that they're adhering to the SEC and PRMS guidelines before we send them off to Ryder Scott.
What are PRMS guidelines?
Petroleum Resource Management System. They're industry standards to how to do proved reserves and calculate reserves.
What did you do before you joined Cantium?
I worked for TRC Consultants. They are the creators of PhD Win, which is the reserve software that is used at Cantium and at Ryder Scott. It's one of the two premier reserve softwares.
So let's talk about the reserve reporting at Cantim that you've heard Mr. Beer testify to this morning. You mentioned that Cantim utilizes an independent third party to attest to reserves. Is that correct?
Yes, that's correct.
And that company is Ryder Scott Company?
Yes, that's correct.
Is that something that Cantim is required to do?
No, we are not a publicly traded company, so we do not have to file with the SEC. However, we have done it every year just as a best practice.
So what is a reserve report and how are you involved with it?
So a reserve report is a forward forecasting of all of the oil and gas reserves that will be produced within the economic field life. And I handle all of our internal reserves. And I also act as a liaison between Cantium and Ryder Scott for their official reserve reports.
You mentioned a database. The report is done in a database called PhD Win. Did you run this extracted report?
Yes, I did.
And that is the report that was provided to the assessor.
Yes.
Was it run from the Ryder Scott database?
Yes. So all I did was after the year-end reports, when we get the signed and sealed official Ryder Scott, they also send us the database that was used to generate those reports. And all I did was using that database, I applied a filter to just run a report on the subset of only the Bay Marchand State wells. And I gave the summary pages for the proved producing and the shut-in. And also to Ms. Harris, I gave her an Excel spreadsheet output of a one-liner of every single well that was used to aggregate to make those summary reports.
And those reports you just talked about were provided to the assessor?
I believe so, yes.
Did you apply any on-top discounts or reductions to the report?
No, I made no changes.
So these numbers that were provided in the reserve report for Ryder Scott were official numbers extracted from their database?
Yes, they are the official Ryder Scott audited reserves.
I have no further questions from Ms. Alexander.
Ms. Alexander, I want to ask you your very last statement. You said those are the official audited results from Ryder Scott.
Yes, so they do, Ryder Scott, they do their own independent, full engineered analysis report on our assets. So it's completely independent from, let's say, what I would call, like, they do their own projections. They're the industry standard for,
Can you show me where that document is in the exhibits?
the
The full,
The-
the Ryder Scott audited report.
these are their numbers. I just
No, that's not my
applied the
question.
expert.
That's not my question. I understand that you ran a computer. You said that Ryder Scott does a full audited report on just Cantium's assets. Where I'm asking is, can you show me that audited report in the exhibits?
No, because that includes majority the federal assets. If we gave you that report, you wouldn't be able to tell what's the state specific assets. It lumps all of Bay Marchand together.
So, well, if you can't tell looking at that report, how were you able to extract out?
In the database, all the case names with state lease, for example, state lease 1365, state lease 2724, anything that is not OCS. So that if it has a SL in front of it, that's a state lease well. So you can just filter state lease and pull
that-
those out.
Those tags, those designators are not in the audited report?
No, they are just
Okay.
the Ryder Scott summary pages. It lumps by field and Bay Marchand is considered one entire field for them. But since then, for 2023, we did ask them and pay for them to run a specific state report. So that's what they're doing from here on out.
Right. But the only information then you had in 2022 was the audited Ryder Scott report for all the assets, correct?
The database, yes.
Well, you said the audited report. Is there a difference or is the database the same as the audited report?
They use the database to generate their audited report.
And again, to the best of your knowledge, that audited report was never provided to the assessor, was it?
These are the Ryder Scott numbers.
That's not my question. I understand that summary sheet that, I assume you're the one that prepared it.
Yes,
I'm
sir.
asking, was the actual audited report provided to the assessor?
Yeah, I do not know.
Thank you. No further questions.
Thank you, Ms. Hunter.
Thank you, Mr. Bertrand.
Thank you, guys.
Commissioner Vercher, we don't need it, but does anyone else need a short break before the next witness? If not, we're good to go.
Tell you what, let's take a 5-minute break.
I'll never say no to one of those.